The Income Tax Act 2025. Today I'm studying Section 33 of the Act, which deals with depreciation that businessmen claim on the assets of the business. It lays down two basic conditions. Firstly, the assessee should be the owner of the asset, and the asset should be used for the business or profession and not for any personal purposes. Regarding the first condition of ownership, there is a clarification that it refers to the assessee being the beneficial owner of the asset, and whether he is registered owner or not, it doesn't really matter as long as he is the beneficial owner. Like, for example, in this example, BB Virtuals is a firm which buys a car and gets it registered in the name of its director, Mr. BB. Now the car is bought using the money of BB Virtuals, and it is used for the business of BB Virtuals as it allows the director to come and go to the office. So the beneficial owner of the car is actually BB Virtual, and they can claim depreciation on that car regardless whether it's registered in the name of BB or any other person. Another thing about ownership is that the assessee can be either a full owner, in that case, he can claim full depreciation, or he can be a part owner of the asset. In that case, he can claim depreciation on only his part of the asset. Then we go on to the next condition of used for business or profession. In this, the use not only refers to the active use of asset but also the passive use. Passive use is when you have complete intention of using the assets, but you cannot use the asset until some condition arises or some circumstances arise. A classic example is fire extinguisher. It can only be used when fire occurs, but we can still claim depreciation throughout the lifetime of its use. Then comes hire purchase. Hire purchase is a form of purchase agreement in which the asset is possession is transferred first, and then the purchaser makes payment over the years, and ownership is transferred on payment of the last installment. But for the purpose of income tax, we can claim depreciation right from the beginning, assuming that the ownership is transferred at the beginning so that the assessee can claim depreciation right from the start, and he does not have to wait for ownership to actually transfer. Then comes the case of lease. In case of lease, who would be able to claim the depreciation, whether it would be the lessor or the lessee? It the answer is that it would be lessor in every case. Why? The reason is because lessee is already paying lease rent to the lessor and is claiming deduction as expense on that lease rent. So you cannot allow double benefit for the lessee. Therefore, lessor is allowed to claim depreciation on the asset, and this claim he can make in both operating lease and finance lease. It doesn't matter what form of lease it is. Then we have this case law relating to the lease agreement. In this case, this is a Supreme Court judgment, and in this case, there was a company named ICDS Limited. This was a leasing company, and its business was to lease trucks and buses to various people. But the trucks and buses had to be registered in the name of the drivers of such vehicles as per some guidelines or rules of the RTO, and they had to comply with that. So there was so the question was whether lessee would be able to claim depreciation or the lessor. In this case, the Supreme Court observed that ICDS is the exclusive owner of the asset because of many conditions, that if the driver does not pay lease rent, ICDS can seize the assets. If the ICDS has right of inspection of assets at any time, and the vehicle will go back to ICDS at the end of their contract, whatever it was. This makes ICDS the actual owner of the assets, and therefore ICDS was allowed to claim depreciation on such vehicles. So the depreciation is allowed to be claimed by the lessor in this case. And there are some more things to be read once. If building is taken on lease and used for business or purpose, and the lessee incurs capex on such building, depreciation on such capex shall be allowed to the lessee. This is the same thing as I studied yesterday. When a lessee is incurring some capital expenditure on the building, it's not allowed as revenue expenditure, obviously, but he does not own any asset. So there is a deeming provision here, section 33(6), which deems that asset, that building, to be the asset of the lessee, and therefore the lessee is allowed to claim depreciation on such building. Then we have depreciation on partially owned asset is allowed to his share of asset only. In case of standby machinery and emergency spares, it's the case of passive assets. Depreciation is allowed even if they are not really put to use yet. And there are conditions where the 100% cost of asset has been allowed as deduction. Like in scientific research section, we can claim all the deduction in the first year only 100% of the cost. In those cases, we are not allowed to claim depreciation because we have already claimed all the benefit, so we cannot take it again. After that, there is this small condition that depreciation is claimed when asset is put to use, not when it's ready to use. There's an example: VB Virtuals makes a classroom, and the classroom is ready for teaching students on August, but the batch actually starts from December, so it's actually put to use on December, so we can claim depreciation from December only. There's another explanation to it. Assuming BB Virtuals put 5 ACs in the classroom, making relying on the assumption that there will be a large number of students, but not many students showed up, so they only need 2 ACs to run the classes. Whether they will be able to claim depreciation on the 2 ACs that they actually put to use, or all the 5 ACs that were ready to be put to use. In this case, they'll be able to claim depreciation on all 5 ACs because it's the case of passive use. The 5 ACs are prepared to be put to use, but there are not those circumstances that necessitate the use of 5 ACs. Then we have this condition whether claiming depreciation is mandatory or optional. So calculation of depreciation is always mandatory. What used to happen before 1988, it was left optional. So what people would do, people would not calculate any depreciation during the tax holiday period, and then when it was over they used to start calculating depreciation, thereby taking an undue advantage of depreciation provision. So it's now prevented, and it's mandatory to calculate depreciation in all cases. Whether you'll be ultimately able to claim it or not is a secondary question, but you have to calculate depreciation. Then comes the concept of class of assets. There are basically 4 classes of assets: building, furniture, plant and machinery, and intangible assets. Intangible assets are like patent, license, trademark, but it does not include goodwill. In building, we have the buildings used for residential or other uses like factory building or any other building, but it also includes the roads, bridges, wells and tube wells, or even temples that have been put in the factory place or business place and used for business, obviously. Then we have furniture and fittings. This includes electrical fittings, wiring and all stuff. Regarding, and there are different rates of depreciation on different assets. We have to see this list and apply the appropriate rates. Then there is a clarification about EPABX and mobile phones. What this thing is? This is like the customer care machine which asks a customer to press 1 or 2 and records their responses accordingly. This is that machine. And mobile phones, these are not considered as computers because computers have 40% rate of depreciation. These are not considered computers, and these are included in other plant and machinery and therefore charged at 15% rate of depreciation. Why? Because these are considered as communication devices rather than computers. Then there are iPads and tablets. So there is no clarification on this issue. As per BB sir, if the iPad or tablets are used, can be used for calling and all, then they are communication devices and they should have 15% depreciation. But if there is no like SIM cards or calling features, then it should have 40% depreciation because these are like computers then. I found a case law on this issue, which is ITAT Amritsar case law, and it said the iPads should be charged at 15% rate of depreciation, but it's an ITAT judgment, so it's not really relevant for CA final syllabus. After that, we have one more asset, which is UPS printers and scanners. These are not exactly computers, but these are treated as computers for income tax purposes and charged at 40% rate of depreciation. We also have a little clarification of what plant includes. These include ships, vehicles, books, scientific apparatus, surgical equipments, but it does not include tea bushes, livestock, building and furniture. Building and furniture are different classes of asset altogether. These are not included in plant and machinery class of asset. We also have a clarification on softwares. If there is a computer software is like MS Office or Windows which we own, which are paid and which we own, then these are computer softwares and taxed at 40% rate of interest as per this list computer software. But if it's a software like Tally or Computex which we don't really own, we just pay a subscription fee, then it's treated as revenue expenditure and we can claim deduction for the expenditure only. And if we make a tailor-made software for our business, it's a specific software and it's our intangible asset. The intangible asset will have 20%, 25% rate of depreciation as per the table. After that, we go to the next thing, which is method of depreciation. In 99.9% cases, we'll always use WDV method of calculation and we'll apply rates in this table. But in case of one particular asset, which is power unit, there will be an option to apply either SLM or WDV method. What is a power unit? It is either a power generation unit or power generation and distribution unit. Notice that distribution can only work if it includes generation. Only distribution unit is not considered as power unit. It will be considered into other assets and we'll use WDV method. So in case of power units, we have a choice of using either SLM or WDV method. But we have to make this decision in the first year of our operations. Here, according to this, we have to exercise this option before return of income is filed. And then we cannot opt out of this. So if we choose straight line method once, we have to stick with it forever. And straight line method, we have to apply a fixed percentage on the actual cost every year. That percentage is given in the rules, but it's not part of our syllabus. Then we have the last concept for today, which is system of depreciation. So in this we have to determine how we would charge depreciation on our asset. In case we have to charge on straight line basis in that one exceptional case of power unit, then we'll charge depreciation on individual assets like we do in accounts. This is not used a lot of times. It's a very rare case. Normally we use WDV method and there is a block of asset system in this. What is a block of asset? A block means asset having same class and as well as the same rate of, if only one condition is fulfilled, that is if they are in the same class, that's not considered a block as long as it does not have the same rate applicable. I have this example here. There are many assets but we'll talk about only this one. The block of plant and machinery taxed at 15%. We have many plant and machinery in this example, like plant and machinery, computer, AC, pollution control equipment. These are all plant and machineries, but we cannot put them in the same block because they have different rates of depreciation. Like plant and machinery has 15% rate of depreciation. This is other plant and machinery. And computers have 40% rate of depreciation. So we'll form two different blocks, a block of plant and machinery 15% and a block of plant and machinery 40%. And then we'll classify all the plant and machinery at 15% in the same block, like this one, motor car at 15%, plant and machinery 15%, and we'll put all these assets in this block and calculate depreciation using WDV method on this particular block. That is all.